Hello and welcome. In this video, we are going to discuss about euro currency and depository receipts such as ADR and GDR. The learning objective is to know how countries trade, invest and raise funds globally. So this video will be divided into two parts, euro currency and depository receipts. So in euro currency, we will learn about what is euro currency, how it works, what are the benefits and challenges. And in depository receipts, we will learn about how companies raise funds from foreign market and difference between ADR and GDR. So let's start with the topic euro currency. So euro currency is used by 20 European countries with a symbol representing E for euro and two parallel lines representing growth with stability. Similarly, when we write rupee, that is Devanagari R with two parallel lines that represents growth with stability. So euro currency is used by 20 European countries and this is the second most traded currency in the world after USD, United States dollar. What are the features of euro currency? Euro is used for trade, banking and payments within member countries. And it also reduces exchange rate risk. What are the advantages and challenges of euro currency? So what are the advantages? It eliminates exchange rate fluctuation because only single currency is used while trading between countries. So there will be less or no exchange rate fluctuation. Then it also reduces transaction cost in trade and tourism. So there will be no conversion of currency and no additional cost. Then it also strengthens European integration between member countries. And what are the challenges of euro currency? Individual member country cannot change the interest rate by their own. And it also widens the difference between the strong economy and poor economy. That is, for example, Germany, the strong economy versus weaker ones, that is Greece. Let's take some examples of euro currency. 1 euro consists of 100 cents. Like in India, 1 rupee equals to 100 paisa. So in euro, 1 euro equals to 100 cents. So this euro currency is classified as banknotes, that is paper currency, and coins, like similar to India. So banknotes can be in specific denomination like 5 euro, 10 euro, 50, 20, 100 euro, etc. And individual member countries have their own coins like 1 cent, 2 cent, 5 cent, 10 cent, 20 cent, etc. So individual member countries have their own coins and one side will be the value of currency and another side will be the national symbol. Now let's discuss about depository receipts. A bank issues certificate in one country representing share of a company from another country. So the investors cannot face any challenges while investing in foreign market. So in India, it is Indian depository receipts. When Indian bank issues depository receipts in India that represent share of a company from foreign company. Okay. Now these depository receipts are majorly classified into ADR and GDR. So remember three things. ADRs are issued by US bank, are traded in US currency and listed in US stock exchange like NYSE, New York Stock Exchange, Nasdaq, Chicago Stock Exchange, etc. So American depository receipts are issued by US bank and traded in US currency. The investor, the purchaser of ADRs will be US citizens. That represents investment in foreign company. Now what are the types of ADRs? There are two types of ADR, sponsored ADR and unsponsored ADR. So sponsored ADRs are issued by a bank in cooperation with foreign company and unsponsored ADRs are issued without involvement of foreign company. What are the advantages of ADR for the investors and for the companies? So for the investors, the advantages are easy access of foreign companies and liquidity and transparency because the ADRs are traded over stock exchange, so there will be liquidity. And what are the advantages for the company? So any foreign company can have access in US capital market, and it also increases the visibility globally. The credibility also increases. For example, Indian companies like Infosys, Wipro, ICICI Bank issues ADR in US market, then it is foreign company for US market. So the investors are investing into Indian companies, but through American depository receipts issued by American bank, issued in American currency and traded on American stock exchange. Now remember two things. First, GDRs are issued by international banks. And second, GDRs are traded in global stock exchange like London Stock Exchange or Luxembourg Stock Exchange, etc. For example, Indian companies like Reliance Industries, Infosys, and ICICI Bank have issued GDR in European Stock Exchange to raise foreign capital. So Indian company can access money capital market of European country. So for European country, it is GDR. Now, what are the difference between ADR and GDR? American depository receipts are issued by American bank, traded in American currency, US dollar, and listed in American stock exchange like NYSE. And the investors will be based in USA only. But GDRs are issued by international banks, traded in internationally, and the stock exchanges like international stock exchange such as London Stock Exchange, Singapore, and Luxembourg Stock Exchange, and are traded in US dollar or currency euro. The country in which it is traded will be the host currency, and investor base will be global investors. Any person in the world can access GDR. Now let's discuss some MCQs. First, Euro currency market deals with only US dollar, only EU currencies, deposits in a currency outside the country of origin, or only Euro. So correct answer is Euro currency market deals with deposit in currency outside country of origin. Remember, Euro currency market. It is talking about Euro currency market. So correct answer is option C. Next, ADR are traded in dash European Stock Exchange, Asian, US, or Global Stock Exchange. Correct answer is US Stock Exchange. Option C. Because GDR are issued in global stock exchanges. Next, a company in India wants to raise capital for European investors without direct listing. It should issue ADR, GDR, Eurobond, or preference share. Correct answer is option 2. As we have discussed, Indian company issues GDR in European market to raise fund. So correct answer is option B, GDR. Next, which of the following correctly distinguishes ADR and GDR? ADR is traded globally? No. Second, ADR is traded in US and GDR is traded in international market. True. B point is correct. Let's check option C. Both ADR and GDR are traded only in companies issuing company currency, issuing company country. No. And D option, ADR is issued in euro. No. ADR is issued in uh, US dollar, and GDR is issued in any currency in which the stock exchange is located. So option 2 is correct answer. Major distinguish between ADR and GDR is ADR is traded in USA and GDR is traded in international market. And last question, which institution is primarily responsible for managing the euro and maintaining price stability in the eurozone? Primary responsible institution: European Commission, World Bank, European Central Bank, or International Monetary Fund. Correct answer is option C, European Central Bank. So here we have completed international finance concepts such as euro currency and depository receipts. Happy learning. Bye.